for all through the utilization of technological development and innovations. So, so question is, in 2 minutes, could you just tell us what are the things that you reckon will affect Africa's ability to enjoy the benefit, and how can this issue?
Hello, can you hear me? Hello, can you hear me?
I hear you.
Okay. All right. Thank you so much for that question. Good evening, everyone. It's great to be here. So I'll just go straight to your question. So in terms of the factors that will affect Africa's ability to enjoy the benefits, I think there are two major areas that I would like to highlight. So the first area is in the area of digital and payment infrastructure. So today, we all know that Africa has almost about 500 million young people, and we're seeing that increasingly everybody is becoming tech savvy. So beyond even becoming tech savvy, we're now embedding technology in everything we do. So think about things like savings. You know, before you will have to go to a bank, fill a form. Now we have technology firms that are spearheading those sorts of developments that we see. So I believe strongly that growth in digital infrastructure, like the internet and mobile penetration that we're seeing, will continue to help to leapfrog our rapid development in Africa. The other thing that we've also been saying is the connectivity in fiber optic networks, right? So a lot of those things where we're seeing a lot of upgrade in technology across the internet will also be a critical factor. And the factor will also include how we think about ensuring that the costs and access to this service are lowered for the underserved community. The second area that I think will also be very critical is in the area of education. So if you think about education, right, a lot of the countries across Africa, we need to look at the strategies for education and skill development, not only focused on the youths, but also adult workers. So if you look at the informal economy, for instance, and people that are from socially disadvantaged groups, how do they begin to enjoy the full benefits of the fourth industrial revolution? So as we become more educated, we can seize those opportunities. So if you look at statistics we have, for instance, share of workers with at least secondary education, statistics are saying, that's according to World Economic Forum, is saying it will increase to about 52% in 2030. So these are the two critical areas that I see. So education will be critical, and then the development of overall internet and mobile penetration will also be very key to achieve this.
before we proceed to tackle, to enjoy the fourth revolution. But my question next is to you, Afolabi. The speed of the technological advancement in the industry, the industrial revolution, has provided a lot of opportunities, and it also comes with a number of threats around data privacy and cybersecurity. Now, knowing that the financial institution or the financial sector is one that is most vulnerable or most susceptible to this, what regulatory measures can be instituted by the government to keep up with the evolving threats to ensure that that the benefits of the fourth revolution outweighs the risk and the threats?
Okay. Am I audible? I think I will just say thank you to you. I've been unmuted. Okay, so thank you, everyone. So it's clear, as you said, that technology, fourth industrial revolution, everything around innovation is very important. It's a moving train. It's something that we have to join, or it's something that we have joined already. Even though it has a lot of advantages, as you rightly mentioned, there are also other threats. There are issues around cybersecurity. There are issues about data protection. I mean, if you look at Nigeria, for instance, we have the NDP, which is the data protection regulation that try to look at how data are being transferred and being manipulated, especially when they have to do with personal data of people. So that is also one of the areas that government can come in to look at data protection, data privacy law, because private people also like to capitalize on every advantage, which is very good for any economy, for instance, to try to make the utmost out of any technology, but you also must make sure that it doesn't infringe on the rights and personal information of others. It's also very important for economies around Africa to look at the kind of endowment that they have. For instance, in many of the countries in Africa, we have a labor abundant economy. So it's very important to then look at the kind of innovation and technology that are going to be able to combine what we are well endowed in, especially in terms of human capital and natural resources, and then be able to leverage them for productivity as a result of innovation. So technology, industrial revolution, fourth one is very important for us, but most importantly, we need to look at the threat. I think these days, especially when you look at the COVID-19, the last 1-2 years now, everybody has been trying to say, okay, we work out of station, and a number of things are happening, but data protection is very important. Cybersecurity, but let's not take advantage of people in terms of their money, save money, invest money, or bet money, and things like that. So it's very important for us to pay attention to the issue of cybersecurity, and it's very important to pay attention to the issue of data privacy. Businesses should thrive, they should make money, but at the same time, government should be able to come in and say, wait a minute, we must do this within the boundary of regulation. That will also be very useful for all of us. Thank you.
So my question to you, Dr. Moyo, is pretty simple. We have artificial intelligence going on right now and robotics, and this has been predicted to disrupt a number of industries and the labor market. But as a way of defense, a number of employees have been resistant to this because of the threat that it poses to them. So my question is, what do you think that can be done to reduce the displacement of workers by technology and to avoid a growing gap between the return to capital and returns to labor in the financial services industry?
Thank you, Mr. Moderator. Obviously, as somebody that is coming from the academics, I would like to start with an abstract. And my abstract is that surely the fourth industrial revolution has disrupted a number of sectors, both positively and adversely. But coming to your question for labor markets, I would like to submit to you that indeed a number of jobs, all the jobs like clerks, like operators, machine operators, have been affected. But at the same time, there's been an increase, particularly in management, jobs that regard to management professionals and technicians. And going forward, for Africa to enjoy, to benefit from the fourth industrial revolution in terms of labor, it is important for Africa to concentrate on those skills that are human-based, skills that need care, for example, compassion, for example, dealing with ambiguity, creativity, imagination. Now, all those type of jobs will be in demand. They are already in demand today, they will be in demand tomorrow. So there is a need for African countries, African universities, academia, to look at these jobs and see how they can be, you can have a focus on them. Secondly, moderator, there is a need for reskilling and upskilling of the current jobs. We can't continue dealing with the jobs that we have. We need to change our accountants, for example, to become some data analysts. So there is a need to relook and reskill, retool, upskill a number of our jobs. So we can't continue, because if we do that, we are going to be bypassed by the fourth industrial revolution. Africa already did not really enjoy the third, did not enjoy the second and first, and we can't afford to lose this one. So we need to get our people, the young people that the earlier speaker spoke about, the young people will need to get into these kind of jobs where we, especially services, where we need services, service industries. So there is need for universities, for government and various stakeholders to ensure that there is upskilling, there is reskilling, there is retooling. Thank you.
Thank you very much for that. So I'll just stay with you one moment, still on this Industry 4.0. And my question is to really enjoy this Industry 4.0, or to really sort of face up to the demand. The requirement is more for the highly skilled labor. And obviously that tilts the balance against the lowly skilled labor, and knowing that Africa abounds with a number of lowly skilled folks. So my question is, what do you think that the government can do to contribute to helping the continent to bridge this knowledge or the know-how gap within its workforce?
Thank you once again. My idea is that there is a need, not for just government, but even the private sector and our universities to study. We need to understand the dynamics of the fourth industrial revolution. We need to look at the the various applications. We need to look at the various programs and various digital technologies, and look at which sectors are growing. So our universities should do that. The private sector should do that. Then at the private sector level, at the level of a firm, of a company, there is a need for in-house development, and that is going to help instead of loading the workers. There is a need to look at how to redeploy them, how to upskill them within the industry. Universities to look at new types of degrees. We can't continue to have the degrees that are being offered, various professional studies that are being offered in our universities. There is a need to totally change and to move with the times, so that we, at the universities, we begin to respond to the fourth industrial revolution demands, so that the supply should look at the demand. So that is important at the universities. So African universities should do that. Governments should also, as I said earlier on, should come up with the policies, responsive policies that are going to ensure the young people are trained, the young people are skilled to respond to the current demands of the fourth industrial revolution. In that way, you bridge the gap. Otherwise, the current situation where the universities are producing students and graduates who are not being absorbed in the artificial intelligence world, in the biotechs, and so it's not helpful. So we need to look at our sciences, our technologies, our mathematics, our engineering. In that way, we are going to be able to respond to the demands of the day. I submit.
Thank you for that, Doctor.
Let's now go to the next question, because it seems that we have lost connectivity with our moderator. And I'm coming back to you, Abifarin. Now, several African countries are known for their high rate of involvement in cyber crimes and related offenses. And this has bred global distrust and has impacted foreign investment into the financial sector, which could get Africa the funding it requires to research and develop cutting-edge technology that could be used to grow the African economy. Now, Abifarin, what do you think could be done to repair our image and increase investors' confidence, and by turn, encourage foreign direct investment?
All right, thank you very much for that question. So the way I look at it, right, cyber crimes and security, they remain global issues. It's not just an African issue. When investors are looking to invest, right, they look out for value. And we all know from data that we see that investors see value in Africa. When they see value, they come. And if you look at the story, even just in 2021, in terms of startup investment across Africa, that already tells a better story. So if you look at Disrupt Africa, the data says that more than 300 African startups have raised 1.1 billion by August of 2021, because Africa continues to be promising, and we continue to deliver on local and international expectations. So level of trust they're building steadily. Now, if you look at a lot of the things that the African startups are also putting in place. So for instance, at Flutter, we invest heavily in our compliance tools. So screening of merchants, all of those things are also becoming critical. Building of databases where all fintechs can search in collaboration with their banks, so that we can pick out where the fraudsters and the cybercrime is coming from. Besides that, if you look at the COVID-19 pandemic as well, there was a significant impact on FDI in Africa, and this was across not just Africa. If you look at it globally. So as we continue to go forward, in terms of building investor confidence, there's a lot that is happening across Africa. There's a lot that is happening in building the tools, credit tools, fraud tools that a lot of the startups are now using to ensure that they're able to spot this quickly as they onboard merchants onto their platform. There's also a lot that has been done by governments and regulators as well. Governments and regulators in partnership with banks as well, to ensure that these things are picked early, and then customer education as well. So educating customers that we have also seen has also picked up in terms of don't share your PIN, don't share your BVN, don't share. So a lot of that information is also happening in the private sector as well, and a lot of the startups. So the confidence is building. There's a lot that is also happening with the post the pandemic, and a lot of investment also going into the tools that can help to spot this and ensure that some of these things go away. They won't go away, because as you continue to build, the fraudsters are also continue to get better at what they do. So it's also getting the right tools to be able to spot this on time. But overall, I would say the confidence is building, because investors will always go after value.
Thank you very much, Abifarin.
Thanks a lot for that, Bode.
Thank you. Mr. Moderator, let me hand back to you.
And this is about cryptocurrency. We know that digital money, cryptocurrencies, these are inevitable consequence of the fourth revolution. And one of the biggest trend of this is the blockchain that has come out of it. But a number of African countries have indicated their intention to launch digital currencies. I mean, Nigeria launched the e-Naira in October. So the question to you, Bode, is what do you envision will be the advantages and disadvantages and the challenges, especially, of making this move in the financial industry? And how do you think this will affect value in the African continent and the currencies in Africa?
All right, thank you very much. So in terms of this, right, like you said, for the first bit, in terms of how I think it will affect value is digital inclusion. So if you look at the e-Naira, for instance, that was recently launched, the objective is to encourage people to join the digital economy, which is in line with the objectives of the fourth revolution, so that they can download into their wallet and use their money. And if you look at this, it aligns very seamlessly with the progress for cashless policy that a lot of the regulators and African countries have been chasing. Because if you look at a lot of the data we have, just working on this as well, cash is still king. But with organizations like banks, fintechs partnering with the CBN on e-Naira, we will begin to see people more encouraged to use their wallets, their e-Naira in day-to-day operations, because we want to ensure that we mop up the cash. I think the other bits that we'll also see is in terms of financial inclusion. So if you look at it, it's like you have the e-Naira, but it's physical. It's physical. Instead of physical Naira, you now have e-Naira, and it gives you access to the financial ecosystem, right to own an account and make transactions. So I think it's a step in the right direction, and it aligns with a lot of the drive that the regulators have been chasing for a number of years.
Right. That's quite interesting. Let me move a little bit to policy now, to you, Afolabi. So as the physical and digital and as well the biological worlds continue to converge, we see that new technological platforms will increase the ability of global citizens to engage with their government. And these citizens of these various African countries and even the world expect their government to embrace a world of disruptive change. Now, subject to their structures and increased level of transparency and efficiency, there's some challenges to financial regulation. Now, with this in mind, what do you think should be, or let me say, how do you think this should be managed by government? And how can the government preserve the interest of the public at large while they continue to support innovation and technological development?
Well, thank you for that. I mean, from what we've been saying so far, we can see that we can't run away from this. I think we've said that before. Whether from the side of the private sector or from the side of the government. So governments will also have to see the need to embrace automation of several of these processes. We understand that government can be very large. Government often runs on bureaucracy. Government has a lot of things to do. And sometimes also government has a lot of stakeholders to deal with as against private sector. If you are in a particular sector and all you produce are shoes, you probably concentrate on shoes and you produce that efficiently. But for governments, more often than not, you have to deal with a lot of issues. For instance, someone is producing something, you deal with the person that is producing, you also deal with the environment that the person is impacting, you deal with the consumer of the product of the person. So government actually has a lot of roles to play in the economy. However, going forward and with the advent of technology innovation, government has also seen the need to automate a lot of processes. And if you look at what is happening, especially let me come home to capital market, to the financial industry that we all know and are speaking about. There are issues about RegTech these days, about post-trade digitization. The representative for Flutter just said something which is very useful, that as a private sector now, you have to automate some of your processes, including submission of some of your returns to the government or your regulator. So when the private sector is moving in that direction, the government sector also has no choice but to move in the same direction. I'll give an instance. There are companies probably that are listed on, or they are public companies, whether they are listed or not, they have to make certain filings to government agencies, be it the Corporate Affairs Commission or Central Bank or Securities and Exchange Commission or Financial Reporting Council, and quite a number of them. And when they do, before now, they used to submit a lot of those things in hard copies. But these days, there are electronic filings. There are systems that allows them to, that can even pull some of these things from their system. In some part of the world, you have XBRL that try to pull some of this information from different databases of the operator and then send them to the regulator. So when the private sector is moving in the other direction to automate its processes for efficiency, for productivity, government also have to move in order to be able to service them properly. It's also possible in certain instances that the government will lead in the process of automation and in the process of innovation. There are certain cases, just mentioned about the CBN, the e-Naira. There are situations where government agencies have to set up innovation lab or set up sandbox and things like that in order to be able to encourage the private sector to be able to do what they do. Because there are certain times that the new innovators may not be able to bear the cost of governance or the cost of supervision. And the regulator then has to come in and be able to ease some of these processes for them. There are players in the financial industry now that are coming from the area of fintech. They may not be able to understand fully the legal and the policy part of what they do, but they understand the technology. So most times government also has to bring these people on board and then because you have to see the value in them. But at the same time, they must be guided. You want to protect innovation. That's usually what you normally say. So government has a lot of roles to play. One, learning from the private sector, another following up on what they are doing. In other situations, leading the private sector in the area of technology sometimes, especially when it comes to post transactions and regulation and things like that can automate some of the processes so that you can actually ease the process of regulation and then regulatory costs can actually come down in the long run.
Absolutely, I agree with you there. And I would like to ask Bode one more question. Sorry for coming to you again. Just to marry the regulation and the players in the industry together. So this is my question to you, Bode. We know that there's been a lot of, given the play of fintechs in our economy in Africa, there's been a viable solution being provided to the lack of financial prosperity. But now, the prospect of the fintech-led prosperity now comes with its own risk and distortions. And as it were, a robust regulatory framework may be necessary to promote a fair outcome for people and reduce the risk of predatory practices amongst customers. So my question is, what is your opinion on the impact of technology in the fintechs? And how can regulatory institutions manage the blind sides of fintechs operating in Africa?
All right, I was trying to get on mute. Okay, thanks for that question. So I think increasingly, right, there's been a lot of, so the regulators that you have today are not the regulators of yesterday. There's been a lot of upskilling as well on the regulatory side, and they are beginning to also recruit people that understand fintechs, because you also have to be able to understand a lot of this to be able to regulate them. So we're increasingly seeing that knowledge come through. But a number of other things, right, in terms of how they can manage this blind side. So there's the collaboration and proactive engagement. This wasn't happening as much even a few years ago, but in the last 2-3 years, especially in the last year, there's been a lot of this now. So for some of the fintechs, for instance, where you need like a bank you need a bank for you to be able to operate your licenses. So regulators were talking more to the banks, but now there's more communication with the fintechs, collaboration, and also active engagement, day-to-day reporting, working together to ensure that we create an ecosystem that works for both the regulator, the government, and the citizens. So there's active information sharing now daily from the regulators, report sharing. So all of this is happening at a scale that we haven't seen before. So that is happening. The other things that we're also seeing is that we're seeing that regulators are also creating policies around, so creating access to sandboxes by this, for instance, Central Bank of Nigeria, so that fintechs can launch projects at a smaller scale for testing, for streamlining. So all of that, has also started. There are conversations around this as well. I think one of the other things is also, as you work with, because payments is partnerships. So as you work, so if I use our own industry, that's fintech and Flutter, for instance, it's partnerships. So when you partner with other providers that have been in the business for long, because both the provider, both the partners, and you have to be compliant as well, you sort of help to you sort of help to improve each other's knowledge. So each other's knowledge in terms of what is the requirement from the regulator, what is the frequency of reporting, what do we report, what are the controls that we need to put in place, what are the policies that we need to put in place to protect the customers, what are the things that you need to think about in onboarding as you think about the entire journey of the customer. So things around refunds policy, chargeback policies. If a customer says it wasn't credited, what are the things that you've put in place? So all of those things are also happening collaboratively across the industry. And if you know, a lot of regulators also have dedicated customer support as well, and customer support lines. In fact, for some of the customers, they tag the regulators directly. And there are always reports on number of tickets, number of customer complaints. So all of that happens. And then the feedback and analysis of this also helps to review and update the processes that we also have on ground. So I'll say there's a lot of collaboration happening. If there are blind sides, the lessons learned from people that have been on the journey earlier have also been helping to develop this.
Yeah, so I like the word you use there, collaboration. There's a lot of I mean, is far from what we say competition. It's more of collaboration. Now, if we stay on that thought, Bode, my question is: the industry 4.0 has made competition very steep in the financial sector, and you see a lot of financial institutions. They've re-examined their ways. They've looked back. And now, what have they done? They've stepped up in terms of the way they compete, in terms of the sort of innovative services they give to their customers. And even their customers are demanding better experiences, seamless transactions, and there's a lot they are asking for. And the banks and all the other financials all fall back to the fintechs. So the question is, how do you see the fintechs managing this expectation for them to be able to retain their customers and also continually improve on the services that they render technologically?
All right. Okay, so in the beginning, I gave examples of how technology is now being embedded in the lives of customers. And that's where innovation and even what you call technology firms, because if you look at fintechs is financial. So financial in terms of investment, in terms of savings, in terms of all of this. So I think the key thing, right, the number one thing is data-driven approach and listening to the customer. So if you have customers that come to your platform, for instance, there's analytics now that tells you how many customers came, at what time of the day they came, what are they buying, what are the things. So all that data is very critical in terms of how you are able to develop products and listening to the customer to address their needs. So one key example that I'll give you easily is during the lockdown, for instance. So when we had the pandemic, right, a lot of the bigger companies were transacting, so because they were all online. But if you had a mom and pop shop, or if you were selling in Ukari, in Lagos, for instance, or any of the markets across Africa, Rwanda, Tanzania, wherever you were, because there was a global shutdown, people were not moving, right? But if your business was online, people were able to see all of this. Now, for the smaller businesses, they don't usually have money to give people to tell them to help me build a website. So what we did was we created a storefront. So in under 5 minutes, you're able to put up a storefront, take pictures of your goods and put it there. And it doesn't matter where you are. If you're doing it from your house in Lagos, somebody anywhere across the world and across Africa can see your goods, and people were able to sell. So we called it the Keep the Lights, because we're saying for the SMEs that didn't have this large infrastructure, how do you digitize? So you can imagine the opportunity here, because we started this in April during the pandemic, and by December we had over 20,000 stores that people had set up selling all sorts of things like food, baby wear, e-commerce, consultancy services. It was just phenomenal. So you can imagine what that access in terms of listening to the customer. What does the customer want? I think that's where a lot of the innovation and where you start from. And that is what a lot of the fintechs are doing. So you start with the customer and then you work backwards. What does the customer need? And then you're saying, what technology can I give to these customers to better help the experience that they already have? The experience, right? And as you also see, as you give these goods, helping the experience will also mean looking through your channels, how easy and accessible, if they have an issue, are your emails working? Is your chat working? Do you have chat bots that respond to them 24/7? If they have issues, if their goods were not delivered, who do they call? These are things that are becoming more critical. So measuring the experience, understanding the needs of the customer, and then working backwards through the entire journey to say, what are the things that the customers expect at each of these is also critical. And as you manage that, customers want ease and convenience, so they naturally come to those companies to transact.
Absolutely. So this is really innovating at the speed of the consumers or the customers' thoughts. Dr. Moyo, I'm going to round off with you. I have a question that, I mean, this sort of brings government, the players, the regulators, everything in one pot. So this is just saying, in practical terms, could you just describe how Africa can integrate the fourth industrial revolution into its financial system in this 21st century? In practical terms, how could we achieve this?
Thank you, Moderator. Let me put on the table 3 or 4 key issues that I think will be helpful. Number 1 for me is that the biggest problem in Africa currently is that whilst there is awareness, there is appreciation of the 4.0 industry. That appreciation is not deep. It's not deep enough in government. It is deep in the private sector, but our governments have not embraced fully the fourth industrial revolution. So the starting point for me is what a government like South Africa has done to put together a technical working group, a kind of commission on 4.0 industry, to advise government technically to study the situation, the current dynamics, the current stock of various technologies, digital technologies and others within the country, and advise government so that it is fully informed. This is necessary for all the governments in Africa. They need to have some kind of a technical working group that is going to advise government. And that group to be composed of various players, technical players, private sector, your academics, your civil society, the policymakers. Then they can advise properly. You have the information. So that's number 1 for me. Number 2 for me would be a real government to put in place a legal framework, a regulatory framework that is going to enable entrepreneurs, innovators, industry, fintechs, and everybody that is involved, so that they have a place, they have a framework, they have the legal environment that is enabling them. They are not doing this behind the doors. They are not hiding. They know that what they're doing is lawful, is helping the government. So there is a need for a comprehensive legally and regulatory framework. And if all African countries should do that, tapping from the technical group, that will be feeding into this value chain of knowledge of 4.0. Number 3 for me, Moderator, is the need for digital infrastructure. The digital infrastructure in Africa is still pathetic. Africa is still lagging behind the rest of the world, particularly the countries south of Sahara. There are few countries like your Kenya and a number of countries that are coming up, your Morocco, Mauritius, probably Nigeria, South Africa, but the rest of other countries, in terms of the digital infrastructure, the bandwidth, the internet penetration, and the internet density is still low. So we need access for people. So governments, together with other stakeholders, should invest in making sure the backbone of 4.0 is laid out throughout the country. Number 4 for me is, I think it is critical that the African Union has already come up with the digital transformation strategy 2021 or 2020 to 2025. I think all African countries should subscribe to that. and that document should not remain a document in the AU walls in Addis. That document should be a living document, and African governments, African policymakers, academics, and private sector, everybody should look at that document because it covers a lot. I think it's a draft now. I'm not sure whether it is fully adopted. I'm not sure, but it is a document that can be used. And these are some of the things that can be done. But otherwise, the most critical one is for government to ensure that there is what I would call cooperation. There is cooperation and competition at the same time, where all these players are cooperating, but at the same time, where it's necessary, there must be competition so that your pricing, your quality is increased. So the laws of cooperation should be put on place. Otherwise, these are some of the things. Broadly, though, they still need to be looked at, refined, and toothpicking of them should be done. But I submit that these are broad things that can be considered. I submit.
Thank you so much for that, Dr. Moyo. It's been quite helpful and insightful to listen to that. I mean, the government work in the private sector is very critical for us to succeed and integrate ourselves into the fourth industrial revolution. Thank you, Bode. Thank you, Afolabi. Having you on the panel is quite, I mean, I really enjoyed myself throughout this session. I'll hand over now to the studio to take it from there. Thank you, everyone.
Thank you so very much to our erudite discussants on the fourth revolution and integrating it on the continent of Africa in the financial sector. There's so many take-homes there that I see. That was so incisive that my moderator had to stretch the time to ensure that we all get the juicy deals out of it. But all in all, they have stressed the need for more collaborations and not competitions. They've also stressed the need to build digital infrastructure, good policies, and to ensure that citizens